that are here before you. I'll start with Mr. Michael Atingi-Ego, the Deputy Governor, who's right at the head of the table. On his right is Mr. Kalyango, who's the Executive Director, Supervision. And on his left is Dr. Adam Mugume, who is the Executive Director, Research. My name is Kenneth Egesa, and I'm the Director, Communications Department. We will start with the reading of the statement by the Deputy Governor, and then we'll have a question and answer session, which will lead us to the end of the English version of the monetary policy statement reading, after which we'll have the translated version in Luganda. Without further ado, I take this opportunity to request the Deputy Governor to read the statement for October.
Thank you, Director of Communication, and a very good afternoon to our listeners and viewers. Welcome to the reading of the monetary policy statement for the month of October 2024. On 7th of October 2024, the Bank of Uganda's Monetary Policy Committee, MPC, reduced the central bank rate, CBR, by 25 basis points to 9.75% due to an improved inflation outlook. Inflation remains subdued, in part reflecting the unwinding of the global shocks, the stable shilling exchange rate, partly due to the steady coffee export receipts, moderate import growth, and prudent monetary policy that balance economic growth recovery while maintaining price stability. Over the 12 months to the month of September 2024, annual headline and core inflation averaged 3.2%. Specifically, annual headline and core inflation decreased to 3% and 3.7% in September 2024, down from 3.5% and 3.9% in August 2024, respectively. Notably, inflation declined in September 2024, driven by lower oil prices and reduced food prices. The decline in core inflation was primarily attributed to a reduction in the services inflation, particularly in passenger transport services. The Bank of Uganda projects average core inflation to remain below the medium-term target of 5% over the next 12 months, supported by the relatively stable shilling exchange rate and the favorable food and oil prices. However, inflation is expected to return and stabilize around the target in the medium term. The inflation outlook is susceptible to risks. On the downside, inflation may be lower if the previous policy actions dampen demand more than expected, the economic environment in the rest of the world worsens unexpectedly, favorable harvests that results in lower food crop inflation than currently projected, and a stronger appreciation of the shilling, partly due to stronger capital inflows coupled with softer global inflation. On the upside, heightened geopolitical tensions could push energy prices and freight costs higher and disrupt the global trade, resulting in higher domestic inflation. Also, the ongoing global developments could result in greater shilling exchange rate depreciation, causing inflation to rise sharply. Extreme weather events could also drive food prices higher than projected, and of course the higher domestic economic growth due to increased investments in extractive industries and effective implementation of the government's programs could result in stronger aggregate demand than currently envisaged, therefore resulting into higher inflation. Overall, we think that the risks to inflation outlook are balanced. GDP estimates for June 2024 quarter by the Uganda Bureau of Statistics, UBOS, indicate that growth has been strong with an annual real GDP growth of 6.6%. High frequency indicators of economic activity and business sentiments point to a continuing pickup in economic activity. Economic growth is still projected at 6 to 6.5% in financial year 2024/25 and 7% in the subsequent years. The growth trajectory is underpinned by strategic government interventions, an increase in foreign direct investment in the extractive industry, and the commencement of oil production in the financial year 2025/26. However, the growth outlook is subject to several risks. On the downside, one, intensified geopolitical tensions could generate further economic shocks through disruptions of trade and supply chains, leading to higher commodity prices, especially oil. Also, elevated trade restrictions and debt levels in many countries could add significant inflationary pressures to the world economy, generating tighter financial conditions for Uganda. In addition, domestic financial conditions could remain tight, resulting in higher borrowing costs and subsequently private sector credit growth remaining sluggish. Higher domestic borrowing to finance fiscal deficits could crowd out the private sector and exacerbate the already constrained private sector credit. By contrast, growth could be higher if inflation drops much lower, raising confidence and real incomes, which will result into stronger demand. And also if the world economy grows more strongly than expected. In addition, if investments in the mineral sector is higher than anticipated, also a more favorable weather conditions which would yield good food crop harvests together with monetary policy conditions which are more accommodative. Overall, risks to the growth outlook are balanced. The MPC therefore assesses that inflation is expected to remain below the target in the near term, and that the risks to inflation are balanced, but acknowledges the inherent uncertainty in the outlook, which warrants a cautious monetary policy stand. Against this backdrop, the MPC reduced the policy rates by 25 basis points to 9.75%. The bands on the CBR remained at +/- 2 percentage points, and the margins on the CBR for the rediscount and the bank rates at 3.4 percentage points respectively. As a result, the rediscount and the bank rates have been reduced to 12.75% and 13.75% respectively. The MPC notes that easing of monetary policy is necessary to keep inflation on track while supporting socio-economic transformation. Any additional changes to the policy rate will continue to rely upon the incoming data and the evolving assessment of risks to guide its decision. That marks the end of the reading of the October 2024 Monetary Policy Statement. Thank you so much for your kind attention.
Thank you very much, Deputy Governor. I now take this opportunity to invite members of the press who are here to raise any questions they have with respect to the statement. I also invite those who are online to either type their questions or raise their hands so that we can take their questions. Please introduce yourself and the media house you're representing, and then go to the question.
So considering the revision, the CBR being dropped a little bit, and then the inflation outlook being as well stable, I'm interested in understanding, when you look at the stats, trade balance has been one of the critical areas, especially for March and August. Is there any underlying reason for that negative outlook, especially in those 2 months, which has always been in the negative? Then two, you've talked about the risk factors in the long run that could contribute to inflation and then the general downslide of the development or economic outlook. Is the coffee threat as posed by the EUDR one of those underlying factors or threat factors? And then lastly, besides, yeah, I think this has already been answered. So for those two, let's go.
So the first question is on the explanation for the trade deficit, and the second one is to do with the EU directive that impacts coffee exports to the EU.
Okay, thank you. You're right that the trade balance continues to be negative, but I think the most important thing is what is the direction of this. I think what you are seeing is that the negativity is reducing, right? It's tending towards zero, right? That you are coming from bigger negatives in the past. Now the magnitude of the negative is coming down, largely because of the improvements in the export volumes and also on the export prices themselves. If you look at the overall index for the export volumes and the price index for the exports, all these have been improving, and specifically underpinned by the coffee prices and also the volume of the coffee exports. And then, of course, we also recently had a rebound in the export of gold. You recall that gold exports had virtually come to a halt, but now we've had a rebound in the gold. So that explains partly why we are having a reducing negative number for the trade balance. So the direction is an encouraging one. Now, on the EU regulation, I will leave Adam to maybe say more on that, but we see it as a risk that if Uganda does not comply with those regulations, we see it as a risk to our exports of coffee to the EU. But as far as we are concerned, the government is doing everything possible to ensure that they comply with the regulations in the near term. But maybe I'll ask Adam to add more on that.
Thank you, DG. To the best of my understanding is that, yes, as DG said, the government is putting in place all required measures to ensure that our coffee exports to EU meet required conditions. Indeed, I think we have been seeing that all coffee farmers are being registered, and that was one of the aspects, and also ensuring that wherever they are, they can be located and ensure that coffee is produced from non-forest areas. So I think some of those measures are being undertaken, and believe that it should not affect our coffee exports. Unless you have any additional information you would want to share with us on that, which probably we haven't captured.
I think most of the focus has been on coffee, but when you look at the spectrum, it involves other key areas of which they contribute to the export promotion.
Okay. In case there are additional questions in the room, can we take them? Yes, please.
Good afternoon. Titus Jimba from UBS TV. Mine is concerned with the ex-depositors of Makai Credit Bank. Last time,
Okay, thank you so much, Titus, for that question. Yes, you're right that the non-insured depositors, those depositors who had more than 10 million shillings in the closed bank, not all of them were paid that money to the full extent. It's only those who had not more than 10 million who were paid the full amount by the Deposit Protection Fund. Now, for those who had more than 10 million shillings, there is a process that is provided for in the law that has got to be followed. And I will ask the Executive Director of Supervision to give us more details on what has happened since then, because last month we came out with a public statement notifying those customers with more than 10 million to submit their alternative accounts to the Executive Director Legal Services, Bank of Uganda, by 30th of September. And to the best of my knowledge, they have been paid a portion of their deposits, which has been worked out based on the amounts that have been realized through the liquidation process. But let me ask the Executive Director of Supervision to give more insights on that.
Thank you, Deputy Governor. It is true, last month we started the process. We started the process of paying all depositors who had amounts above 10 million. And these payments are done in accordance with the law. The law provides for payment based on how much has been collected. You might have seen why they are not getting the full amount, because we were only able to collect an amount that was equivalent to 25% distribution. So for everyone who was paid, if you had 100 shillings, they could only pay you 25 shillings. So we could not pay the full amount. The payment is based on how much has been collected. So when there's another round of collection, they will still be called to be paid the balance. But the collection or the payment depends on how much has been collected. You made the point that they are wondering why, if capital was kept in Bank of Uganda, why they are not paid the full amount of money. When the Bank of Uganda sets a capital limit, it doesn't bring the money here. The money is kept in the bank. It is supposed to help them absorb losses, supposed to help them do the business or expand. So our role is to make sure that that capital is maintained at levels that are sufficient for the bank to continue working. So it is not true that capital gets brought to the bank. It is kept, you have your capital. All that we see through the supervision mechanism is we keep measuring, monitoring that you still have that level of capital to enable you continue doing business in the banking sector. So, so for those that would still owe money, it is not where once collections are done, a second round will be announced accordingly. If you notice, they were paid, I think, 25% of their balance you hold. Thank you, Chairman.
Yeah. And Tessa, just to add to that, you also need to ask yourself, what is the purpose of capital? Sometimes when yeah, Titus, just to add to that, you also need to ask yourself, what is the purpose of capital? When a bank creates or is faced with non-performing loans, there are provision requirements by Bank of Uganda. If a loan has not been performing for, let's say, more than 1 year, all right, or at least 1 year, it hasn't been performing, that loan is offset from the existing capital. So the question that you should be asking yourself is, how big were the non-performing loans in this bank? So the first thing that eats into that is capital is eroded by the non-performing loans. And remember, some of these banks became undercapitalized because of the huge non-performing loans. So if you're already undercapitalized, where do you get the capital from? If indeed what you're asking us was correct.
Thank you for those responses. We have some 2 questions from the chat. This is on Teams. We have Bernard Busulwa of the East African newspaper, and his question is, what is the likely impact of the CBR cut on short-term economic growth momentum? We also have a question from Reuters, who is requesting that you repeat the rate decision. I think he missed it. Chair, maybe we take those two and then come back again.
Okay, the impact of the short-term impact of the CBR cut, I am going to ask the Executive Director of Research to address that one. And then the second one's
a recap of the decision by MPC.
Okay. A recap of the decision is that on the 7th of October 2024, the Bank of Uganda's Monetary Policy Committee, MPC, reduced the central bank rate, CBR, by 25 basis points to 9.75% due to an improved inflation outlook. And I did mention that inflation has remained subdued, which is basically reflecting the unwinding of the global shocks, the stable shilling exchange rate, partly due to the strong coffee export receipts, and then the moderate growth in the imports, but importantly also the prudent monetary policy that has balanced growth recovery while maintaining price stability. So now, if you look at our outlook, at least for the next 12 to 18 months, the forecasts are that given the forecast round for the month of October, the inflation is much lower than we had actually projected during the August forecast round. Now, based on that improved inflation outlook, we therefore took the decision to reduce the CBR by 25 basis points. But like I mentioned earlier on, this baseline that we have is subject to a number of risks. There are upside risks and there are downside risks. But in the concluding statement, I did say that any additional changes to the policy rate will continue to rely upon the incoming data and the evolving assessment of the risks to guide this decision. So hopefully that addresses the concerns raised by Reuters, but I stand to add more in case I wasn't very clear. Adam, the short-term impact of the CBR cuts?
Thank you, Bernard, for the question. I think when we cut the policy rate, we always say we have inflation and GDP 12 months horizon in mind. So you might have seen that in the recent past, the interbank rates, for example, have been around 12%, the upper limit, which is 12%. Okay. To just repeat, although my repeat button is always off. What I said was that when we were setting policy rate or when we were changing it, we have both economic growth and inflation in perspective, and that is 12 months horizon. And so therefore, the whole aspect of adjusting policy stance, you have to look at the way the monetary policy stance is transmitted to the rest of the economy. So that's why I was saying that, for example, in the recent past, we know that interbank rates overnight 7-day have been hovering around 12% because the policy rate was at 10 and the upper margin of the central bank was at 12. So the adjustment downwards to 9.75 means that upper band will be 11.75. So the interbank rates already will adjust towards that upper band, say, to the maximum. Although the mid rate is 9.75, but we have to the maximum it has to go to 11.75. So which means that with the easing of the policy stance, with the interbank rates coming lower, ideally banks now will find that they have sufficient liquidity to lend either to government or to the private sector at much lower rates than probably what was bearing in before easing. And those are the ones that will eventually transmit into economic growth and therefore inflation down the road. So to answer you, Bernard, as I think you know very well, it may not be immediate as if you are doing an instant coffee, but gradually as liquidity becomes abundant in the interbank, as interbank rates age lower, as lending rates and private sector credit pick up, that's when we shall see eventually that those will spill over into a stronger economic growth. I hope I have answered you, Bernard.
Thank you very much. We have two questions from Ali Taha. I think this is of the New Vision. The first one is, despite strong FDI inflows, other financial flows have weakened substantially and weighed on forex reserves. Kindly give us an update on the gold purchase program initiative. Additionally, give us a broad plan from your perspective on improving reserve standings amid global shocks. That's the first question. The second question, again from Ali, is the government guaranteed loans worth 140 billion to Harbour Group of companies through various commercial banks. However, as of June 30th, 2024, based on your recently launched annual report, the entire loan amount was impaired. Any developments as of the first quarter of the financial year on this matter? Those are the two questions from Ali.
Sorry, can you repeat the second question?
So the second question is about the loans that were guaranteed to Harbour Group of companies worth 140 billion that were reported in our annual statement, our annual report, as impaired. Ali is asking if there's been any new development in the first quarter of this financial year.
Okay, let me start with the financial flows. I think, Ali, what's happening in terms of the financial flows is that while our FDI flows have been very robust, particularly into the extractive sector, that is oil and gas, we see that the other financial flows have not performed strongly. So, for example, the portfolio flows. I think for the entire financial year, we must have had negative, or we must have had a net outflows on account of the portfolio flows. And that's because the interest rates in the advanced economies were higher or were raised, and therefore there was a flight to safety by most of the non-resident investors in our financial markets. So the portfolio flows were not as strong as they used to be in the past. I think there were more of them on the side of net outflows. And then also, if you look at the budget support flows, that should have really come under the financial flows. Because of the tightened global financial conditions, government has not been accessing external financing as much as it used to. So therefore, the inflows on account of budget support have also not been very strong. And then, of course, we have also had stronger outflows in terms of amortization of debt, external debt. Because when you amortize external debt, the principal payments go to the financial account. So that has also affected. So a combination of those factors have more than offset the robust FDI flows. And that's why the performance of the financial account has not been as strong as it used to be. It is still positive, but the positive has come down, and it cannot fully offset the negative current account balance. And that's why we have had a rundown in our reserves, because the current account balance together with the financial account balance, if you added them, if you have anything in the capital account, then you end up with the overall balance, and is financed through changes in the reserves. So a huge negative in the current account balance, which more than offset the surplus in the financial account, resulted into a rundown in the reserves. Now, I will leave the gold story to Adam to talk about. But I want to understand what you mean by the impairment that you are referring to, because the recently released accounts of the central bank indicate that the core capital of Bank of Uganda is at 1.41 trillion shillings. So while the share capital is 20 billion, the core capital is at 1.41 trillion shillings, largely explained by the recapitalization bonds that government issued to Bank of Uganda, amounting to about 1.8 trillion shillings. And those bonds were issued to Bank of Uganda on account of the losses that Bank of Uganda had made, including the loans that you referred to. Because those loans had to be written off, therefore government had to recapitalize Bank of Uganda. So I'm not sure how you are linking the loans you refer to the annual accounts of Bank of Uganda for 2023/24. But Bank of Uganda capital is not impaired. Can I correct you on that? It's not impaired. The core capital is at 1.41 trillion. Share capital is at 20 billion. And the recapitalization bonds at 1.81 billion. That's why the core capital is at 1.4 billion. Adam?
On the question of gold purchase, we are on track. We have met potential suppliers. Now, before I talk about the delay has been largely because we want to ensure that whenever we buy gold, we can trace it to the source. And tracing to the source means that we have to contact various mining companies and individuals to see whether they can supply us gold. So we have dealt with those that are licensed in Busia and also in the Kasanda Mubende side. We are now contacting this week, we are contacting Buhweju. So out of those, in the coming weeks, then we shall start negotiations about the contracts to see when they can start and how much gold they can supply to us, the modalities of collections, etc. We believe we should be able to finalize that in the coming months or so, and therefore we believe that by the end of this calendar year, we should at least have a workable framework with the potential suppliers who can give us gold, and then we start buying the gold. I hope I have answered you, Ari, on that. Thank you.
Are there any more questions in the room? Yes, please go ahead. Can you use the microphone, please?
I was just wondering about the trade deficits. And when you look at the IGC, in one of their reports, they indicated Uganda to be one of those countries in East Africa that's doing very badly, especially when it comes to trade deflection. So I'm wondering whether it's something that you've been taking track of, especially when it comes to the ESC customs union, whereby the different countries apply for the stay of application, which in turn leads to trade deflection. Because Uganda has been the leading country, then followed by Kenya and Tanzania.
Can you answer the question, please?
I'm not sure I got you correctly, but as the Deputy Governor said, we have had a trade deficit, yes. And in our case, in the case of Uganda, there are two factors. One, is that as we go into the oil exportation, automatically you have to import the machinery. And those machinery are heavy, including the machinery to do the infrastructure, the roads, the airport, etc. And because of that, then you have high import bill that is associated with those infrastructure developments. So there is nothing you can do so long as you want to get oil out of the ground. You have to import the machines. They have to impact on your import bill, and therefore that is part of the story why our trade deficit is remains elevated. And as the Deputy Governor said, now as we exit from importing the machinery into now exporting oil, those will come down, and therefore import bill will subsequently decline. The other aspect of the trade deficit is that on average we import about oil, fuel, to the tune of 1.4 billion or so in a year. Now that was elevated because of international oil prices. Therefore, there's nothing you can do about that because those are global developments. The only real way now is that as international oil prices is downwards, then the import bill also reduces. And you add on the fact that down the road also you're going to start producing its own fuel, then that should substantially ease the trade deficit. So the current trade deficit we are talking about is 1 or 2 years down the road, and then you start seeing a positive recovery. So therefore, and yes, in all EAC countries we have a trade deficit depending on the size of the economy and what we are importing. So that is part of the story.
All right, we have come to the end of the reading of the monetary policy statement for October 2024. Thank you very much for tuning in, and for those who have been able to come through physically, thank you very much for coming. We will now go to the Luganda translation. Thank you very much, Deputy Governor, Executive Director Research, and Executive Director Supervision.
Statement ya mumyuka wa Governor wa Bank enkulu ya Uganda ekwata ku byensimbi ey'omwezi ogw'ekkumi mwaka 2024. Omumyuka wa Governor atangazizza nti akakiiko ke twakazaako erinnya lya Monetary Policy Committee mu Lungereza kasazeewo okukendeeza akabonero aka Central Bank Rate okuva ku bitundu 10 buli 100 ne kakakkanya ne kakateeka ku bitundu 9 n'obutundutundu 75 buli 100, ng'ekyo kyesigamiziddwa ku kuba nti enkyukakyuka y'emiwendo gy'ebintu ekkakkanye mu myezi 12 egiyise, ate ne biba ku by'ettooki mu maaso kiraga nti enkyukakyuka y'emiwendo gy'ebintu eri mu kukkakkana. Lwaki enkyukakyuka y'emiwendo gy'ebintu oba omuzungu gyayita inflation ekkakkanye? Nti okutwaliza awamu okusoomozebwa okwali mu kutambuza ebintu mu mawanga gonna oba kye tuyita global shocks zigenze zeemulungula, ate ne siringi ya Uganda bw'ogigeraageranya ne dola ya Amerika yenywereza ddala olw'okuba essente eziva mu kutunda emmwanyi ebweru w'eggwanga ate ne bye tujja ebweru w'eggwanga nabyo bikulidde ku kasoobo okutwaliza awamu bw'ogattako n'enkola eya monetary policy oba enkwata gye bakuttemu ensonga eyo eya monetary policy mu myezi egiyise. So omumyuka gavana n'atangaaza nti mu myezi 12 egiyise okutuuka ku mwezi ogwa September 2024 enkyukakyuka y'emiwendo gy'ebintu ekulidde ku bitundu 3 n'obutundutundu 2 buli 100. Bwe bakubye ettooki mu maaso ne balaga nti okutwaliza awamu enkyukakyuka y'emiwendo gy'ebintu egenda kusigala wansi w'ebitundu 5 buli 100, era ekyo nga bakyesigamiziddwa ku nsonga eziwerako nti ezisinga ebbiri, nti ekisooka okutwaliza awamu essiringi ya Uganda bw'ogigeraganya n'amawanga amalala egenda kubanga amazima ddala eri nga yenywezezzaamukko, ate ne bakuba n'ettooki maaso ne balaga nti n'ebbeeyi y'emmere awamu n'amafuta naye ejja kuba ng'eri waddewaddeko. Era bwe bakubye ettooki maaso ne batangaaza nti wadde ogwo guli gutyo wayinza okubeerawo okusoomoozebwa, oluusi enkyukakyuka y'emiwendo gy'ebintu yeeyongerera ddala okukkakkana okukka wansi w'ebitundu 5 buli 100, nga batunuulidde nti emyezi egiyise singa ebikoleddwa mu nkola gye twakazaako ya monetary policy biyongereza ddala okukkakkanya obwetaavu oba omuzungu kyayita demand, ekyo kiyinza okwongerako okukkiririza ddala enkyukakyuka y'emiwendo gy'ebintu. Ne balaga nti singa n'ebyenfuna mu mawanga gonna mu nsi beeyongera okwonooneka, ekyo kiyinza okukkakkanyiza ddala enkyukakyuka y'emiwendo gy'ebintu. Bwe tweyongera okufuna amakungula amalungi, ekyo nakyo kijja kwongera okukkakkanya ebbeeyi y'emmere ate awamu n'essiringi ya Uganda okwenyweza ku mawanga amalala. Naye n'anokolayo nti tuyinza okulaba okusinziira ku kye bateebereza nga inflation oba enkyukakyuka y'emiwendo gy'ebintu yeeyongeddeko waggulu singa obukonge buno bujja ne bubeerawo. Ekisooka tebayita geopolitical tension, singa ensiitaana y'abakirimaanyi yeeyongera nga bwe tugimanyi eyinza okwongeza ebbeeyi y'amafuta ne ssente ezitambulizibwako ebintu, ekyo ne kyongera okuteeka pressure ku nkyukakyuka y'emiwendo gy'ebintu. Singa siringi ya Uganda enaabuuka okuva ku ezo ensonga ezinaaba zivudde mu nsiitaana y'abakirimaanyi enaakosa ebyenfuna by'ensi yonna, oba singa ebbeeyi y'emmere yeeyongera singa embeera y'obudde eba etambudde bubi, ekyo nakyo kiraba nti kiyinza okwongezaako ku nkyukakyuka y'emiwendo gy'ebintu. Era omumyuka n'anokolayo n'akalala nti singa tulaba nti essente ze basiga mu sectors ez'enjawulo ziba zeeyongedde obungi ne zooyongeza ebbugumu mu byenfuna, kyo nakyo kiyinza okwongeza inflation. Naye n'agumya bannayuganda nti okutwaliza awamu enkyukakyuka y'emiwendo gy'ebintu n'ebyo ebiyinza ogikosa oba okujjamusa oba okugikkakkanya byonna birabika nga biri awo byenkana ku minzaani byenkana amaanyi. So kiri kyatangaziza nti okutwaliza awamu enkyukakyuka y'emiwendo gy'ebintu ekkakkana, ekyo kibeera nga kyatangaziza bw'atyo. N'atunulako mu byenfuna n'atangaaza nti okutwaliza awamu batunula speed ebyekonomi ekulidde ku bitundu 6 n'obutundutundu 6 buli 100 mu myezi 3 egiyise paka ku June 2024, nga kino bannaffe aba Uganda Bureau of Statistics be batuwadde bwino oyo. N'atangaaza nti bwe bakuba mu ttooki mu maaso omwaka gw'ebyensimbi 2024-2025 gugenda kukulira ku bitundu 6 ku 100 paka ku bitundu 6 n'obutundutundu 5 buli 100. Ate n'atangaaza nti mugiri emyaka egijja egyeddako 2025-2026 bwe bakuba ttooki mu maaso bwe balaba tujja kukulira waggulu ebitundu nga 7 buli 100 n'okweyongera mu maaso. N'atangaaza nti ensonga lwaki ebyenfuna biri bwe bityo tekisooka gavumenti eyongeddemu amaanyi oba omungereza kyayita strategic government interventions. Ekirala nti essente eziyingira mu ggwanga lyattu Uganda naddala ezo ze bateeka mu kusima ebyobugagga mu ttaka oba kye bayise extractive industry, ezo nazo zeeyongedde obungi. Ate n'alaga nti 2025-2026 balaba nti okuyiikuula amafuta kujja kuba kutandise, ekyo kyongeze ebbugumu mu byenfuna. N'atangaaza nti naye wayinza okubeerawo ebintu oba obukongo obuyinza okutulemesa okukulira ku sipiidi eyo. N'anokolayo geopolitical tensions singa ensiitaana y'abakirimaanyi esigala ng'ekyeyongera mu maaso, ekyo kiyinza okukosa bbeeyi y'ebintu naddala ng'amafuta. Ate n'alaga nti singa amawanga gonna gali mu nsi nago geeyongera amabanja ne gagatuula mu bulago, ekyo nakyo kiyinza okwogera inflation oba enkyukakyuka y'emiwendo gy'ebintu mu nsi yonna. Ate n'alaga nti singa n'enkola eya gavumenti okwewola ssente okuva mu nkola gye tuyitamu ya treasury bond nayo yeeyongera, ekyo kyonna kiyinza okwongezaako ku miwendo bannayuganda gye beewolerako egya bizinesi. Kino kizingamyamu okwewola kw'abannayuganda. Naye n'atugumya nti okutwaliza awamu waliwo n'ekyetusobola oba ebisobola okwongeza ebyenfuna ebyo ne bikula okusukka ku bitundu 6.5 buli 100 oba bitadde 2.21 na 2.25, ti singa enkyukakyuka y'ebintu eyeeyongera okukkakkana, ekyo kijja kwongeza ssente zaffe amaanyi oba omuzungu kyayita disposable income ebeere nga yeeyongeddeko amaanyi. N'anokolayo ensonga endala nti ebyenfuna by'amawanga gonna okutwaliza awamu biyinza okweyongera okukula. Ssente ze bateeka mu kuyiikuula ebyobugagga eby'omu ttaka ezo nazo zisuubirwa okweyongerako. Singa embeera y'obudde nayo yeeyongerako, kitegeeza nti tujja kubeerako emmere gye tuteeka ku katale nga nnyingiko, ate n'enkola eyaffe eya monetary policy nayo esobola okwongeramu amaanyi mu byenfuna. Era n'agumya bannayuganda nti okutwaliza awamu nabyo bye bakubyemu ttooki mu byenkulaakulana, nabyo balaba nti ebyo ebiyinza okuzingamya n'ebyo ebiyinza okukuza ku minzaani birabika nga tewali luuyi lusinga lunnaayo maanyi, ne tulaga nti ebyenfuna nga bwabikubyemu ttooki bwe bijja okutambula. Okusinziira ku ezo ensonga, enkyukakyuka y'emiwendo gy'ebintu n'enkulaakulana, akakiiko ne kasalawo nti bo be bakuba ttooki mu maaso balaba nga okutwaliza awamu enkyukakyuka y'emiwendo gy'ebintu ejja kuba ng'eri wansi w'ebitundu 5 buli 100, wadde nga mulimu obukonge bwenjogeddeko obuyinza okukosaamu enkyukakyuka eyo, naye ng'ekyo kye basinziddeko okukkakkanya akabonero ka CBR kajja ku bitundu 10 buli 100 ne bakateeka ku bitundu 9 n'obutundutundu 7.5 buli 100. Ebyo mu bufunze bibadde ebigambo by'omumyuka wa gavana owa banka enkulu eya Uganda.
Mwami George Sonko, weebale kumenya ebibadde mu monetary policy statement ey'omumyuka wa gavana Bank of Uganda. Kaakati tujja kugenda ku bibuuzo, bwe muba mulinawo ebibuuzo eno y'essaawa. Kale ndaba tewali alina kibuuzo, n'olwekyo okusoma kwa monetary policy committee statement okwaleero kuwedde. Mwebale nnyo okujja. Nammwe ababadde balaba ku ntimbe ne ku TV, mwebale kubeerako.